Up, cash flow hackers. Sorry, I'm just getting a little situated here, but welcome to the live today here, Friday. What are we, May 29th, 2023. Oh my gosh, the year is flying by. So hey, today we are going to be going through and talking about whole life insurance, how to utilize not just whole life insurance, but all different types of life insurance in your life. One of the things that happens a lot, I think, on this channel is I create a lot of content. I try to focus on keeping information as good as possible, but I get a lot of comments, and ultimately when I get these comments, I guess I get a lot of comments that I want to be able to give these really big in-depth answers to. And I think I love doing these lives because it gives people the opportunity to engage and kind of keep it real, keep it flowing, keep it kind of off the cuff, and just answer questions to hopefully help either you get the information you need to make a better decision when it comes to purchasing a policy in your own life, or if you're an agent and you're looking to figure out how to communicate something in a better, more effective way, or understand a concept a little deeper, we can go deep and dive into it. And honestly, I love doing live more than I like recording video. So this is a relief for me to be able to do this. So let's get into this. Here's what we're going to do. I'm going to start by getting into the different roles of whole life insurance, the different roles of term life insurance, and the different role that life insurance can play in your life. I'm going to do it from a high level. I think as I get into this, one of the things that I want to start with is the whole idea of infinite banking, cash value life insurance, and all this stuff, because I know I do a lot of conversation. I have a lot of conversations around this. I do a lot of videos on this topic. But if you dig deeper and you look harder, you'll notice that I am not really like what I would call an infinite bankite, right? Like I'm not, or what some other people call it, a Nashite, right? Like I'm not a hardcore infinite banking person, from the context that I don't really subscribe to everything that infinite banking teaches. I don't subscribe to the idea that you can make money buying depreciating assets. I don't subscribe to the idea that you pay yourself interest, because that's not how it works. So there are certain concepts that I think are really important to understand. What I'm going to do today is cut through all the noise and talk about the elements of life insurance and cash value life insurance that actually matter, right? I'll show you, even in the areas that I disagree with maybe some of the other influencers on TikTok, Instagram, YouTube, wherever, about maybe how it's being positioned. It doesn't mean that I don't agree with the concept of utilizing cash value life insurance as a whole. And I think sometimes people get confused, like when I give a little bit of a hard time to maybe the way something is marketed or pitched, and then out of the other side of my mouth, I kind of go, hey, it's still great, right? And so people are like, well, how the heck can that be the case? And so I'm going to get into all that today. So why don't I do this? I'm just going to do this. I'm going to share my screen. Let's get over here. And this is my my vibe board. If you don't have one of these and you're looking to do content, you need to get one, because they are magic. I don't know how people do it without it. It was a game changer when I got this thing. So here's the deal. When we look at life insurance, what are we thinking about here? Well, most people think of life insurance, insurance. Holy crap, I can't write. So they think of it as death insurance, right? So the problem is, it's not death insurance, it is life insurance. And so what do we mean by that? Well, let's think about how we can actually take life insurance and how we can leverage it. And I think if you're an agent, I'm a big believer that we need to be thinking about this in terms of how do we help people solve problems. This is one thing I think is super important, is you need to stop thinking about yourself as a life insurance agent and start thinking about yourself as an entrepreneur, because entrepreneurs go out and they help people solve their problems. I think one of the reasons that I'm so effective at what I do and having conversations with individuals is because I don't really care about selling life insurance. I'm a big believer in life insurance. I'm a big believer in the power of what we do and the products that we have that can solve different problems for different people. But it doesn't mean it's the right fit for everybody. So I'm not a person who's out there trying to be like, everybody needs to do infinite banking or everybody needs a banking policy. I think at some point in time in your life, you're probably going to want to get a banking policy. However, doesn't mean you're ready for it, right? And so when you understand that, and you can, if you get to a place where you can understand the different roles and the different problems that the products that you have to offer can solve for people, and then you can kind of reverse engineer your way into conversations with people, and then you can show up, and if you understand those problems that you're able to solve, and now you get to go have high level conversations with people, you don't have to go in there trying to fit the infinite banking conversation into every conversation you're having. You just get to have conversations with people. And what I'm going to share with you right now is my philosophy on life insurance, my philosophy on how to utilize all different types of life insurance in different ways into your life, and the different problems that life insurance can solve for you. And when we look at it from that angle, now what we're able to do is we're able to communicate our values. And when we're talking to individuals, if their values align with our values and our story makes sense, right? And we're able to have this conversation, and they get to kind of see us through the lens of thinking like, hey, wow, Chris really understands where I'm coming from. Man, the way Chris just described that and explained this situation to me, and based on the quality of questions Chris asked me about my situation and scenario, leads me to believe that Chris actually understands what's going on. Chris understands what I'm going through. And what does that do? That breeds trust. But you can't fake it, right? Like, and it breeds trust because it's trustable, right? Like, because when you do things in this way, you can't fake it. Anybody can make a video on infinite banking and different things and like be a marketer about it and make a good video. Very few people have the ability to go and do a live like we do, and get to the level of depth and education and be able to answer questions on the fly, and have conversations and ask questions to other people, qualifying questions to get more clarity about their situation before we make a suggestion on a product, right? Like, because I think that's really important. So as an agent, I think that is your number one need, is to invest time into understanding the products, but don't do it through the lens of like trying to learn the product, trying to sell the product to everybody, right? Your job is just to understand the tools that you have at your disposal, right? The ammunition that you have in your belt, the different weapons at your disposal for this game. And ultimately that's what it comes down to. So now what I'm going to do is I'm going to get back to this, and we're going to get into it. So most people think about it as death insurance, but here's how I would describe it. I don't think it's about death insurance. I think, life insurance is in the word, because it's not just insuring your life. You can actually use it during your life, right? And I think that's something that is missed. Now, I've been doing a little more content on this lately because I think it's been coming up in conversations, and I think I've been seeing more and more information that is maybe misleading, maybe just not talking about it. But I think sometimes we're misleading by omission, right? If you tell half truths and the other part of the truth is, it's kind of like IUL, right? Like IUL, it's really good at half truths, but they don't tell the other part of the story that leads to the actual truth of performance of the product. So what I talk about is human life value, and HLV, we'll just call it for this conversation, just to keep things easy as far as writing it on the board. Human life value. The question that I always ask, and I do this a lot, this conversation, but it's why. Why do you want what you want? Why do you want anything in life? Why do you not just want insurance, and I'm talking to everybody watching this as if you're somebody who is interested in buying life insurance. So why do you want life insurance, or why do you want to prioritize whatever you're thinking about with your money, right? Like, and that why typically has to do with legacy. What's going to happen when we're gone. It has to do with impact while we're here. It has to do with creation. There's all sorts of different things. Like, a lot of people have different needs, liquidity, protection, all these different things. Somebody could come to me and say, hey, Chris, like, I want to get a policy, and I want a banking policy, and I want a 40/60 design, or I want a 10/90 design, or anything like that. My first question isn't, oh, that's interesting, tell me why you think you want that design from a technical perspective. My question is going to be, why do you want that from a long-term perspective. I think as a life insurance agent, your number one barrier to success is your ability to be able to get people to think long-term. Long-term thinking is the key to success in any way, shape, or form. So as life insurance agents, our number one job is to get people to think long-term. Because if we can start with the end in mind, and let's face it, the end for everybody is our ultimate demise and mortality, right? And if we can get everybody to start with the end in mind and start thinking about, like, what do you want your life to look like and why is that important to you? So you think about, it's the Simon Sinek golden circle. Why, how, what, right? So we can think about, why do we want it? You know, we know what we want our life to look like, but not what doesn't matter until we know why it's important to us. That's the important part. Once we know why it's important to us, we know how we can do it. And the what would be, you know, life insurance is going to play into it. The how is like the policy design, but at the end of the day, the why is all the things that you're going to go through in life and why it's important to you. If you don't do it, what is your life going to look like, right? I hope that makes sense. So so now that we got that out of the way, now we can talk about human life value, right? And human life value is basically saying, all right, no matter what age you are right now, life insurance companies are not going to what we call over-insure you. I get a lot of people. And by the way, anybody has any questions, go ahead and just comment. I am checking the comments every now and then. So go ahead and comment in the comment section or whatever. I will engage. I'm happy if anything I'm saying doesn't make sense or you want me to dive deeper or pause or like pivot a little bit. This whole hour is designed to just provide value to you guys. It's always the best and going to provide the most value when you're asking questions on the fly. That way I know I'm answering what you want, right? Like rather than being, I can't take all the phone calls that I get and all the requests and email that I get to meet with people individually. So that's why I'm starting to try to do these on a regular basis to be able to allow people to answer, to ask me questions while we're moving here. So when we think about like long-term thinking and we think about the fact that we all have a human life value and we realize the fact that life insurance companies are not going to over-insure you, that the amount of insurance you're ever going to qualify is always based on this human life value, which is a term, by the way, that's kind of created by the life insurance industry. Let's say this, I have a tricky relationship with the human life value term, because what this is saying is like, I'm just going to keep it really simple. It's saying if you make 100K, the life insurance company is going to say you got 20 to 40X. So that'd be anywhere from 2 million to 4 million human life value, right? So my challenge with this is like, it puts a limitation on this, right? So I know a lot of people that have $100,000 of income right now. I know several people. I could probably name 10 people in my life that I know that are making around the six-figure mark right here, maybe give or take a little bit either way, maybe $80,000 to $120,000 in that range. The life insurance company would look at them and they'd say, well, you know, based on your scenario, we're going to give you a 30X human life value at 100K. That's $3 million. Now, the human life value is $3 million, and that's great. The challenge that I have with that is I can name a handful of people that their human life value, if I were to look at them and if I were to look at the trajectory they're on, they have a much, much, much greater human life value and potential than $3 million. So the idea of human life value is limiting because it's just a mathematical number. It's a mathematical equation effectively based on where you are right now. And it doesn't take your future potential into consideration. But when we talk about life insurance companies cannot insure you based on future potential. They can only deal with what's in front of them in this moment in time. And so this is where the idea of stacking policies comes in, right? So think about it this way. When we look at anybody, when I talk to anybody, I'm not ever going into a situation where I'm trying to like focus on maximizing their whole life insurance. What I'm first and foremost looking at is I'm trying to maximize their human life value. And I'm just going to use this $3 million situation as an example. So let's say they have $3 million of human life value. Okay, I know that this is roughly what the insurance company is going to go for. And what we're going to try to do is we're going to try to maximize that with the insurance company and go into underwriting for the maximum that they could potentially qualify for. Now, that doesn't mean they have to take it all, but I absolutely suggest they should. And so What we do with this, though, is now what we do is we have to look at cash flow. As we look at cash flow, now maybe this person's saying, hey, I make 100 grand a year. I only though have, say $10,000 per year that I can save 10% of my income. I'm willing to save 10% of that money. And, so what we have to do is we say, all right, well, how do we maximize this $10,000? So what I would do is I would go in and I would get a quote and I would say, all right, let's assume this person's 35 years old. I would say, all right, a $3 million term policy that's convertible. We always want to do a convertible. I'll get into that in a second. The $3 million term policy that's convertible, maybe that's $70 per month for 10 years, 10-year term, 10YT, right? Or if we did a 20-year term, it might go up to, let's just call it $100 to $110. Okay. So out of this, what I'm going to first do is say, all right, $100 a month, that's $1,200 a year. Let's roll with that number for a 20-year term, right? So now what's going to happen is we go, all right, we got $1,200 per month for this 20-year term. That leaves us in cash with $8,800, right? So what I'm going to do then is I'm going to take this 8,800 and I'm going to go over and I'm going to try to maximize what I can do into a cash efficient policy. One of the things I learned from Don Blanton back in the day, and I used to love doing this, is everybody thinks about a MEC as a modified endowment contract. And that's a bad thing, right? A MEC is a modified endowment contract. When you MEC a policy, you lose the tax advantages to it. But financing a policy and funding a policy, let's call it right up to the MEC limit, right up to the $1 or less than MEC is still a MEC. It's just a max, not MECs, efficient contract, right? That's our MEC. We're always trying to MEC a policy in a max efficient contract sort of way, funding it up to $1 or less than the modified endowment contract level, right? And so that is how we focus on building cash efficient policies. But what we do is we focus first and foremost on maximizing the human life value. And if we know it's $1,200 a year to be able to bang out that $3 million of human life value coverage. Okay, now I know this is what I did this video the other day. It's like I'm buying my net worth, and then build cash flow, right? And so when we realize that we have the ability to do this, is why I always say this is a self-completing plan. If anything bad happens to you, this kind of plan is the only plan in the world that will make sure what you want to happen will happen when you want it to happen, whether you're here to see it or not. There's not a person in the world that can't afford this, right? Because at the end of the day, once again, this human life value starts. So I said at the beginning, the human life value is where we start with, I should say. And at the beginning, I said, I don't believe everybody's ready for an infinite banking policy. What do I mean by that? Well, a lot of people believe that everybody should start with a banking policy, but at the end of the day, maybe you have debt, you have inefficiencies in your finances, you have leaks in your financial world, you got to plug those. Maybe your cash flow isn't where it needs to be or where you want it to be. And at the end of the day, it might make sense. Sometimes if you have front loads of policy, you can utilize your policies to pay off the debt faster and all these different things. But at the end of the day, what I do believe is that you should be able to at least start with the $1,200 a month. Now, what you do with this $8,800, it may go into a policy. It may go into paying down debt faster. It may, one of the things that we do at Life 180 is we work through this with our clients. We help them pay down their debts and liabilities in the most effective, efficient way possible. We've got a whole program and a whole process that guides people down there through that process on YouTube. If you're on the channel, you can go down in the description below. If that's something that you're dealing with, you can actually have a consultation. It's a debt elimination consultation with one of the debt specialists on the team. But the bottom line is everybody should start with this $1,200, and this $8,800 is really going to depend based on your situation on what's right for you. Now, let's assume that, all right, you're good for a policy. Like you do fall into the spectrum where that's good. well, then we're going to talk about maximizing that. But if not, we would just use this $1,200. We'd go buy convertible term. We'd take the time to try to pay off other debt, pay debt down, which would increase cash flow. And once the cash flow is increased, now we can convert the convertible term in chunks as little as 10% at a time. So if we had $3 million, we could convert it, let's say 300K of DB at a time to a properly designed whole life insurance policy. And so this allows us to create a system. If we have a 20-year term, every 2 years, we can convert 10% of this. If it's convertible, every 2 years, we can convert this as what we did. We bought our net worth and we build our cash flow. We're showing people how to do this, right? So when we look at life insurance, we look at all the different things that it can do for people, and we look at the ways that we use it as a tool, like it's important to understand not every product solves all solutions. Now, like I'm gonna take a step back. Hopefully this makes sense. If this makes sense to everybody, give me a 1. If it doesn't, you're confused, give me a 2, and we'll go a little deeper. But what I want to do is take a step back now, and I'm gonna go a bit more of an airplane view and start like really thinking about, all right, what are the products that are available? Let's really just break it down in the life insurance space. There's cheap term. I break term into 3 categories. There's cheap term, there's living benefits term, and there's convertible term. They all solve different needs based on what you're going for. All right, Richard, if you're still like, let me know if you're, I'm going to keep going. If anybody has any complications around this, just once again, just explain kind of what you're thinking, where the gap is, and I'll go deeper. Hopefully, as I'm backing up here, I'm slowing down to go fast here, right? Like I'm slowing down to kind of like start from the top, and then we'll dive back into execution. But we got to start with the top, with what our product availabilities are and what problems these products all solve. So then there's whole life, there's GUL, guaranteed universal life. There is IUL. I'll talk about that for a second. I don't want to spend a lot of time on that this video. Then you have, what do you have? You have disability insurance, DI. You have long-term care. And I'm only putting products down that most people are going to be licensed to sell. And then there's annuities, which is also a life insurance product. And so when you think about as a fixed product life insurance agent, these are the products that you have available. It's 1, 2, 3, 4, 5, 6, 7, 8, 9. And there may be a couple others, but like these are the ones that are ultimately going to be the tool belt that you have to use the most effectively. And so when we look at it like this and we go, all right, cheap term, what is that going to solve? Well, people that have really, how would I say this? People that don't really have a desire to convert in the future. I'm not a big fan of cheap term because I think it takes away options. Typically you're able to pay 20 to 40% less in premium with cheap term. But that's obviously because nothing in life is free. And that lack of premium comes with a lack of benefit and a lack of protection long-term. And part of that protection is the convertibility. Cheap term, you don't get living benefits. You don't get the conversion ability. And so therefore, it is literally for a period of time that is certain, say 10 years, 20 years, 15 years, something of that nature. And then, when that gets completed, the term expires and you're dead. 99.1% of cheap term policies never get paid out, never have anything. So the reason they're so cheap is because the insurance company, actuarially speaking, has it all figured out. They can price them that way because chances are you're not going to use it. It's like a catastrophic coverage thing. And that is what it is. Now, living benefits term, I've been talking a lot about this a lot lately because of the fact for me, I just believe that, I've had a lot of experience lately, personally in the last 3 years with my father-in-law. Living benefits have like really, really impacted my family, I guess is the only way to put it, in a positive way. And so it's one of those things I didn't used to focus on. It's, I said in a video the other day, is like, if you watch my videos from 2016, my message was a little bit different than it is today. And if you watch me 5 years from now, it's probably going to be different than it is today, because we all go through life and we're all human. And for me, I didn't used to prioritize living benefits because I never had anything close to home that hit me personally. And I'll tell you right now, it's powerful when you have the ability for living benefits to change your family's life, which we have. It has you focus on it a little bit more, right? And so living benefits term is really important. And then what I love the most is convertible term insurance, because when we're talking about implementing a plan to maximize your human life value and create a plan to buy your net worth and build your cash flow, when you're buying your net worth, you're utilizing the convertible term insurance to lock in your insurability and guarantee that you're able to, that you're able to execute on a plan moving forward, and that you buy a term policy with the right time horizon, whether it's 10 years, whether it's 15 years, 20 years, that you have a plan to convert it on a systematic basis over a period of time. So somebody just made a comment. I'm going to put this up here and read it so I can get to it. I'm in the process of creating my first policy with you guys. Awesome. Thank you. Hopefully we're able to help with that. Let me know who you're working with, and I'll make sure everything is going well, or if they need my help with anything, I'm happy to hop in. One question would be, should I be trying to maximize my first policy or get a policy for both your wife and you at the same time? That is a very common question. So what I would say is this. If you're looking at a policy and you have a set amount of cash flow, and your wife and you, well, I would say even if your wife's not working, or if she's the breadwinner and you're the one who's not working as much, or however that kind of pie is sliced up, at the end of the day, I'll just use my example as the kind of easy explanation, right? So I'm the breadwinner. My wife is totally capable, right? If I died, she could totally step in and do a lot of different things. In fact, she's better than me. Dan's amazing. So Dan, you're in amazing hands with Dan, but I'm always here if you need anything. But my wife, as an example, she doesn't work, right? And so, from that angle, her demise, if something tragic happened to her, the human life value, the life insurance companies are going to look at her life and they're going to be like, it's just not worth as much, which to me is just garbage, right? Like, that's what I was talking about. My challenge with the human life value idea, the life insurance company is going to assign a numerical value, but that doesn't mean her value is worth less than mine, right? Like, she contributes to our kids' lives. She has just as big of an impact on our legacy as a family, as a couple, with our kids and all these different things. Her ability to walk this earth and contribute and be a supportive wife and be an amazing mother, and we do all these things together. I can't do what I do. Like, my human life value is impacted by her ability to show up in a way that isn't quantifiable by any insurance company's calculation, right? And so that's the tricky part that I have with that. And that's, I think, a pretty easy example to explain. But when it comes to your question directly about what policy should I do, what I would do is this, and I'm going to go back to the board here, and I would look at it. And once again, Jacob, this is me not knowing your situation. This is just, don't take this as personal advice, because Dan is going to be able to help you with this. But I think if you go with this concept to Dan and talk to him about it, he'll help you kind of dial it in and get it a little more on point as you go. But if you have like a husband and you have a wife, right? And you have, let's say you have a total, I'm just going to use round numbers. Let's say you have a total of $10,000 to work with, right? What we want to do is you each have a human life value. And I'm just going to assume you're in my situation and that you are the breadwinner. It may be reverse. I don't know. There's no judgment here on that. I got to put somebody in that situation. I always worry about talking about that because people get mad at me. Like, why does the husband have to be the breadwinner? It doesn't. I'm just, just going there. So when we look at the human life value, maybe your human life value is 3 million. Maybe hers is, maybe her human life value is 1.5 million, just to keep it simple, just to try to be like, all right, her human life value on paper is half of yours. So if that's the case, what I'm doing, the principle doesn't change. And by the way, the insurance company may say her human life value is is less, or it may be drastically less. But whatever you want to do, you want to maximize this human life value through convertible term. No matter what, it doesn't change. We're going to do the same thing. We're going to look at the human life value through convertible term for both of you. And we're going to price that out. Now, for you, using this example, I don't know how old you are or anything like that, but just using the example, let's just say it's 120 per month or $100 per month, which is $1,200 per year. I'm just drawing all over the place here. $1,200 per year. And let's say for her, it's $600 per year, right? So now out of that or $10,000, what we have here is we have $1,800, right? $1,800 is what you have to insure the human life value. Now, what does that leave you? In this scenario, it would leave you with $8,200, right? Now, what we want to do is we want to take this $8,200 and put it on the life of the most insurable person, because that's going to be the most cost-effective way to go. The youngest, the healthiest, anything of that nature. Because now you have the human life value locked in. And let's say you do it for a period of time. Now, I say this, there's a caveat to this. You put the insurance of the cash flow on the most insurable person, as long as you have a plan to take this $1,800 and over periods of time, convert that term, and you buy your net worth and you build cash flow. So as you build cash flow, if you're following kind of like the cash flow hacking philosophy of investing for cash flow and doing it over time, this is how you do it, right? You think about it, you've locked in your net worth, you've got your family protected for both of you. If anything happens to her, you are in good shape, right? You're going to have time to mourn. You're going to have time to, maybe hire assistants and make sure that maybe you have a live-in nanny or somebody if you have or need help with your kids, or vice versa. But that's all there. This allows you, and this 1,800 is certainly a drag. And by the way, it wouldn't be this clean, because at the end of the day, whatever you do for whole life, you're going to have a term rider that goes on it. But we would start with the cost of the convertible term, and we'd work it out back from there. You would build it, then you build a policy based on 8,200. You figure out what that is, and then you just kind of work back and forth a little bit to find that happy medium. But that's what I would do if I were you. I would look at that through that lens. I think both of you should be insured. I don't think it's a compromise like who should I start with. I think you utilize convertible term insurance to insure both of you. It's going to be cheaper. It's going to be affordable. And whatever you have left on cash flow after that, then and only then do you put it into a whole life policy and maximize the cash efficiency and the growth, and focus on building that cash flow over a period of time. But you're locking in a strategic plan over the next 15 to 20 years if you do it the right way. Does that make sense? Does that help? Let me know, and we'll go from there. I'll try to check in a second. So, but then we get to, okay, so we think about it. All right, living benefits are obviously, huge. Living benefits are always available on whole life and IUL if you buy them with the right company. Living benefits are huge. I think it's one of the things as we get older. It's one of the problems that life insurance solves. When we think about long-term care here, right? Long-term care is a really expensive insurance, right? Like they are just like long-term care is real, like huge benefit to a lot of people. But we're talking thousands of dollars a month in premium per month if you wait until you're 55 or 60, where most people unfortunately wait. And, it's a lot of companies that really focused in the long-term care market, like Genworth is a company that really suffered because long-term care rates, the longer people live, the more financial stress is on long-term care. So what happens is most people don't prioritize it till it's too late. And one of the beautiful things about living benefits, it doesn't replace long-term care. So I want to be abundantly clear about that. I'm not saying it should take place of it, but living benefits can certainly supplement it if cash flow is a challenge, because we're always talking about financial efficiency. We want to make sure that we're getting our dollars to perform multiple functions. And what I mean by that is each dollar is serving multiple purposes, right? Like it's going to be your life insurance. It's going to be a savings vehicle. It's going to be your like maybe college savings for your kids. It's going to be a volatility buffer for your retirement income. It's going to be the living benefits if you become terminally ill, you can accelerate the death benefit, like my father-in-law did to pay for his alternative treatments for his pancreatic cancer, that kind of stuff. GUL is a cheap form of universal life. It is a permanent, guaranteed product. And a lot of times when you're trying to buy permanent insurance, this is typically for like legacy planning. If you are like estate planning, people with high enough net worth that you are worried about the taxable consequences for your heirs, this is GUL is it's probably one of the most efficient policies to use. And so that is what it is. Now IUL, once again, it's got living benefits. That's a good thing. It's better than having nothing at all, but it's the most misrepresented product on the face of the earth. I'm not going to spend any more time talking about it than that right now. Disability insurance is super important. Most people don't realize how valuable it is. The good news is you have a little bit of coverage and a little bit of protection through the living benefits with certain life insurance companies, not all of them. Once again, not all living benefits are created equally. Some companies offer critical protection and critical acceleration. Some offer chronic acceleration, and some only offer terminal. If you get diagnosed with a terminal illness, will you be able to accelerate the death benefit? So it's really important when we talk about not every company is created equally. Not all policies are exactly the same. And when I say we work with 5 different companies, and I get pressed all the time, like, what's the best company? I say there's no real one company is better than another. It's just which company is best for you. And the answer is really based on what are your values, what are your beliefs, what are the problems that you're trying to solve. All these companies have different features in them that make them more beneficial than others, depending on how you plan on designing the policy and how you want to fund it, what riders you think you need, what living benefits values you want to prioritize. Some people don't care, right? Some people have other insurances like long-term care, and they're like, I don't really need that part of it. So if that comes ultimately at a built-in cost, like, why wouldn't I go with another company? Some people want the PUAs for the cash value, and it looks really good on paper, but then they don't realize the front load fees for some of these PUAs are 11 and 15% at some point, at this point in time, when other companies are only 6%. And people wonder, well, how come one company can offer higher early liquidity than another company? That's all these reasons, right? So there's no good or bad. They're all really good companies. It's just, can you design them for what your ultimate goals are, right? And that's why there are a couple companies that really stand out and are highlighted, but even those companies that we really like that kind of win and check more boxes than other companies, even they don't win every time, right? And that, I think it's important to understand that. Now, annuities, this is just income insurance, right? So here's the deal. A lot of people like to use IUL for retirement income. Well, I got news for you. If you're interested in using any kind of index strategy for retirement income, you need to be utilizing fixed index annuities, FIAs, instead of IULs. And I encourage everybody who's an agent to go out and just do some research on what the cap rates and what the index strategies are for fixed index annuities versus IULs. And when you compare those two to each other, it starts to really poke holes in IUL's strategies. And I think that's important to understand. So annuities are income insurance. I think I love fixed index annuities, and I can't stand IULs. And that should say a lot to a lot of people because index annuities are created having to meet their guarantees, where IULs are not created to have to meet their guarantees. And so as we look through this, though, we think about, all right, as life insurance agents, what is our job? Our job is to help solve problems for the people that we're trying to serve. Okay, so what do we need to do? We need to focus on human life value. And then we have to figure out, all right, how do we maximize human life value? Well, we got to focus on 1, 2, or 3. We got to maximize that with convertible term, because most people, unfortunately, are not going to be able to maximize their human life value all through a whole life insurance policy. They're just not going to have the cash flow in America. Every now and then, I think 1 out of maybe 20 people I talk to are able to go through and actually do it all through a whole life policy right out of the gate. Most people, it is some blend of these 3 products combined with whole life insurance at some point in time. Now, like I said, when I go back here, if we go back to this and you got a $10,000 budget, if it's going to cost you $1,200 to get the insurance coverage for yourself, and you got $8,800 left in cash flow, we have to figure out, what are you doing with this cash flow? Are you paying off debt? Are you going to put it into a policy and then leverage it? Do you have other money that you can front load into a policy? This is one of the things that like I always see that is mind numbing to me. I'll come and I saw this morning, by the way, like it makes my head want to explode. I had a person come to me and say, hey, I want to do this banking thing and I want to pay off debt. This doesn't happen very often, but it happens more often than it should. They go, I want to pay off debt. And I say, okay, that's cool. How much money are we talking about debt? So they go, all right, yeah, my debt is, it was $44,000 ballpark. It was just over. So the debt was $44,000. And then I go, all right, that's cool. How much do you have in cash flow? And they said, well, I could probably put $1,000 a month into a policy. And their thought was, I want to take this $1,000 a month and I want to finance it. And they were like, I want a 40-60 policy. It's so funny how often people come to me and they're like, they know exactly what they need and they don't even really fully know what they're talking about yet, right? They go, I want a fully 40-60 policy because that's what Nelson Nash said to do in his book. And so I go, well, 40-60 policy, if we do a 40-60 policy, out of the 12,000, you're only going to have like 7,200 liquid, right? So out of this 44,000, what's the interest rate? And this guy was 16%, right? So out of this, 40% of 12,000, you're talking, or 60% of the 12,000 gets you to $7,200 of cash value. But what is the difference there? You're talking about, what is it? $4,800 of opportunity cost, because you lose liquidity of that. That's $4,800 that could have gone to paying down this money right away, that you lose the ability to pay it down on. And so he was like, oh, well, okay, that's interesting. I hadn't, somebody else was trying to convince me that it would have been good to just, put that money through a policy and pay it and not interrupt the compounding on this. I'm like, well, that part's true. You won't interrupt the compounding on the 72, but this $4,800, you lost the leverage. That could have paid off 10% of this high interest debt. And you always got to be comparing. The problem with a lot of these debt softwares, and it's not that I'm against using whole life insurance to pay off debt, because in certain situations it works, but in a lot of situations, most situations that it's sold in, unfortunately, it's not the most effective way, because this $4,800, you have to compare what is the interest rate of when you're utilizing and borrowing against this. And then you have to think about what is the opportunity cost of having this money lose control of, and that $4,800 you're still paying 16% on during that period of time. You have to run the apples to apples conversion, right? Like that's really important. In this scenario, this person happened to have about $140,000 sitting in it was a 401k, but they rolled it over into an IRA, but I'm just going to write a 401k. And so, and in this, he was like, yeah, I'm keeping it. I'm keeping this money in a money market account right now because it's paying 4.5%. And I think the market's going down and I just want to keep it there. I was like, well, dude, you're earning 4.5% here. I get it. It's your retirement fund. This is where my advice, I didn't give advice. First of all, I just try to educate. I don't ever tell, especially I'm pretty hardline on this. A lot of people tell you because of their opinion about 401ks. I'll tell you my opinion. I would never put money into a 401k. I would personally cash my money out of a 401k because I don't believe in 401ks. And I think I have a unique skill set and ability that the opportunity cost of my money sitting in any kind of qualified account like 401k or IRA is the opportunity cost is just catastrophic to my lifetime earning potential, because what I can do with the control of that money is way more, right? And so if I had this 141k, and for me, I look at the opportunity cost, I would pay the taxes and I would pay the penalty, because you're never getting away from the taxes. I think taxes are going up. I would pay the 10% penalty, because 10% and 4.5%, it's 14.5%, but you're getting rid of 16% debt, right? So I could clear this out. The question is, on this debt, how much cash flow is going towards this, right? The key is, if you're going to use this to pay off if you're going to use that to pay off the debt, You're going to create more cash flow. The question is, what are you going to do with that cash flow? You need to save that cash flow, right? And so I'm always telling people, like, it's all about financial efficiency. You got to look at the moving parts. And the cool part about having life insurance as part of this is, like, we have the abilities to offer guarantees. We have the abilities to move money around and be financial efficiency coaches, because listen, life insurance companies manage risk and manage safe returns better than any other financial institutions on the face of the earth, as long as we set our expectations in alignment with reality and what we can expect, and we combine term insurance with whole life insurance, and we come up with a debt elimination plan. And if you don't have any debt, now it's like, all right, how do we maximize a policy, right? So as we go through this process, like, at the end of the day, all we're trying to do, guys, all we're trying to do is solve people's problems. If we just focus on that, and don't go into conversations just trying to say, hey, you need to get a banking policy. Learn about them, learn about their goals, figure out where they're at, figure out, what they're trying to accomplish, what they're worried about, figure out, what their debt looks like, what their plan is to pay off that debt, figure out what keeps them up at night. What are they worried about their future? Because I guarantee you have the ability to help them solve it. Now, this is, if anybody has any questions about that, please chime in. I got about 10 minutes left that I'm going to be doing here. And I want to spend a little time talking about this. Do me a favor, everybody that's on here, if you're engaged and able to leave it in the chat, give me a 1 if you're a life insurance agent, and give me a 2 if you're somebody who's interested in life insurance. Like, you're kind of watching my content, maybe you watch some of my content, you're watching other people's content too. You're going around YouTube and you're trying to learn as much as possible about this to make the best decision for yourself. Let me know. I would really appreciate that. I always like to get a sense of, like, who's watching. And obviously, if you're a 2, Jacob, thank you. I know you can go down and below, and if you want to have a clarity call with somebody just to learn about this, I think our process is as pure as it gets. My team, Jacob here is working with Dan already, and I think, Jacob, you could probably attest to this. I'm pretty hardcore about the fact that our team, I do not want a hardcore sales pitch. I want to be a value add. We call it a clarity call for a reason, because I want people to be able to come through and just ask questions with no pressure, to be able to get clarity about how this stuff works, how it'll fit into their life. And, obviously we can start running illustrations, and we could go through your numbers, we can figure this stuff out over time. But ultimately, that's what I want, is people to have a resource that they can go through and get clarity, to kind of like clear up all the noise and the mess, because we talk a lot about theory and concepts and all this stuff, but what does it look like for you in your life? That's the purpose. And so there's a link down below, clarity call link, set up a free consultation. You can go do that. Now, for licensed agents, I just launched this thing. I don't know if anybody's seen it yet, but I have, it's now on Amazon, Life 180 Agent Success Planner. It's something I created for the agents on our team. I was on your live. Oh yeah. So yeah, I Nolan, you'll have to go back in and check that out. That's awesome. Jacob, thank you. That's amazing. And you can always have Dan reach out to me, Jacob, if you need anything. So Nolan, you'll have to go back to the last live. We did a lot of stuff. I can't get into that right now though. But so check this out, guys. If you are a licensed agent, I've got this planner. In this planner, I go through everything for that you need to run your business. It's got a daily activity tracker. There's a whole morning preparation, morning mindset because I guess let me take a step back. One of the things I think in this business that's really, really important is it's our job. I think we have a unique ability in this business to be able to serve people at a level and be able to make this dramatic impact in the lives of others that leaves a ripple effect, right? Because if you think about like what we do, if we can get people to think long-term and we can get people to act in their own best interests and see the bigger picture and think about why, and then think about the how and the what. Most people are thinking from the outside in of the golden circle that I did at the beginning of this live. You know, where it's like most people are thinking, well, what do I have to do? How do I do it? And they don't even get to the why is it important to me? But if they start thinking about why is it important to them, and then they go, well, how could I accomplish that? And they think from a place of abundance. And then once they think about how, then the what is just an executable vehicle, and you're gonna be able to do that. So our job as agents, as financial professionals, is to not sell life insurance, but to get people to really start with why, and to ask the right questions to get them to think long term. And sometimes you can't do that with people. Sometimes it's easier than others. But at the end of the day, I think that's our mission. And I think if more people followed this process, like, the world would be a completely different place. And we got to be coming from a place of abundance. And I think as agents, unfortunately, there's too much rushing of the process, right? Like, too much like, get in the business, recruit people, go make sales, like, do this really quick. And it's not really in service of the clients. It's in service of, maybe your upline or, whatever. At the end of the day, I just think you got to take the time and not try to push products, but actually slow down and think about, how do you add more value to the people? Now, I've got this planner I went through, and I think how we start our day really matters. So I've got a whole section in here on morning mindset. Now, you go through, you can fill out, there's all these questions. I suggest everybody go through every day, go through this morning mindset thing and think about all the different ways, the people that you can make a positive impact in your life, the thinking about the things that could derail your day, how you deal with it. Live like Life 180 is living intentionally for excellence. So it's how you start your day is everything, right? Like, living intentionally, going through that intentionally, thinking about your daily movement and thinking about your health, how you're going to show up in the world. I think that's really important. I think the people that are intentional about their own health and how they show up are the people that make the greatest impact in the world. Ending your day with evening reflection, I think, is really important. And think about, did I show up today how I wanted to show up? Was I the most powerful version of myself? Was I the most impactful version of myself? Did I do today what I set out to do today? I got news for you. You're going to get through the day. Most of the time, you're going to be like, I fell short, and that's okay. But anything we measure improves, and this is a place that you can go through and you can kind of measure, how it went for you. We also have an element in here. This is why this is designed for life insurance agents, is because, and by the way, if you're anybody else that feels like you need a planner, and you're not a life insurance agent, this planner is still amazing. It's just, you're going to kind of skip over this part, which is the 15-point day. 15-point day basically says, hey, what are the activities as a life insurance agent I need to be focusing on to make money, and to be able to go out and serve people. Now, the part about this, and I'm not going to get into all the details right now, the part about this is it's all about being a value add to the people in your life, to your community, to your family, to the people that you're serving online. If you're making content like I am, at the end of the day, it's all being intentional about adding more value into the world than you're extracting from it. And that's what this planner is going to give you a framework on how to do and how to get your mindset right. And when you align your mindset with your actions and you kind of weave those two things together, that's where movement happens over time. I always kind of say, we don't want to be focused on the results. We want to be focused on the activity we know we're going to lead to the results. And if we just commit to that activity, good things are going to happen over time. And you're going to have a compound effect on your own personal growth, on your professional growth. And then obviously money follows value. So then you'll start to have a compounding of your paycheck as you start to serve more people, more policies, you do it the right way, you start getting more referrals because you become more referable. And that is ultimately what happens, right? And so this is the thing. I've got this, it's up on Amazon. It's $50 basically on Amazon. But you can go to planner.life180.com and you can get this planner for $19. Now, I don't want any surprises on anybody because you can go get it for $19. We'll ship it to you. We're also doing one other thing, October 17th, because I've just felt called to do this for a long time. And now, I think we're up to over 200 something agents on our team now. And, with the Life 180 organization, I've been wanting to put something together and put a program together for our agents to be able to have them go through and launch their business the right way. So I created the Life 180 Challenge. Now, for the agents on the Life 180 team, you're going to be able to join it, be part of it. All you have to do is get the planner, you're in. So if you're on this call and you're an agent, don't worry about it. We could talk about that in the private training, in our private company calls. As far as this goes, if you're not with Life 180, I want to open it up to everybody, because when I started doing all this content, I didn't have an agency. My goal is to really just make a positive impact in the industry. It just so happened that we ended up starting an agency and an IMO as a solution to a problem that I saw that nobody else was solving. So I said, hey, let's get in and solve this problem. But at the same time, even if people are not with us, I want to open this up and offer it to you. So we're going to be offering it. You'll see after you go through the planner, you're going to have an offer to upgrade and take advantage of the Life 180 challenge and join our community, where we're going to walk you through and have 2 live trainings every single week that'll walk you through this process, that you'll be in the planner every day. You'll get access to a private community group in our new Life 180 app that we're launching, that only the people in this get first access to, which is going to be amazing. So you'll get access to that community. You're going to get access to our marketing assistance and help. If you're looking to learn how to be a better marketer and build online systems to be able to engage with your clients and communicate with them better, maybe create some scalability to what you have going on, everything is in this program that you're going to need to be able to end the year right. But it's not just end the year right to make a lot of money. It's end the year right, finish with the right activities, build the right habits so you can make 2024 your best year ever. Now, you will make more money, probably, if you follow this process, because you're going to serve more people. You're going to be more consistent. You're going to be more dedicated and committed to following the right activities that are going to get you the right results. And that's what this is about. But at the end of the day, it's really the reason I wanted to do this challenge is just give people a track that they could run on to build the new habits, to get their business going on the right foot, and to prepare for next year. Because it'll be great for the end of the year here as well. But I really think 2024 is going to be an interesting year. And I think your ability to do this right out of the gate is going to be pivotal in your success for next year, right? I think too many people wait and they're like, I'll get through this year, and then next year I'll start off with a bang in January. If you don't do the work now to prepare and get everything built and the framework built out to be able to launch next year like a business and start thinking about your life insurance practice as an entrepreneur, and think about it as a business, not just as a salesperson, but you are running a business. That's what we're going to walk everybody through, is how to launch your life insurance business. And I will tell you, if you are making less than $100,000 a year, if you're not making 6 figures yet, this will put you over the top. And I promise you, if you've come in and you follow this and you do it every single day, and you show me that you are in this thing every single day without fail, and you commit to doing the work, if you don't make 6 figures, I'll give you $1,000. Like it's just impossible for you to not, if you just focus on the right activities. This business is simple. It's not easy, but it's simple if you are just willing to get out of your head, get into your heart, let go of your ego, and just go serve people. And if you believe in what you're doing, it's the easiest and most fulfilling business in the world. So anyway, that is that. Any questions before we go? And I guess I should put this out there. I think I put it at the beginning, but it's https planner.life180.com. If you are interested in getting that, I would say go check it out. Get the planner. Whether you join the challenge or not, you can go to Amazon, like I said, get it for $50, or you can go get the planner for, I think it's $19 or $17, something like that on this link. And so go check that out and go from there. You get the planner, like I said, if you're like Gilbert here, you're on the team, bro. So just get the planner. Do not, upgrade, to the thing if you don't want to the challenge. You're going to get in, bro. We got a different offer for all the agents on the team if you're with Life 180. So just know that that's the case. So that's it, guys. Anybody has any questions about anything, you can always email chris@life180.com. That's chris@life180.com. I answer my own emails. I'm a control freak like that. I don't let my assistant in my email inbox, simply because I just, I want everything to be personal. And so that's that. So any questions, feel free to reach out. Hopefully everybody found value in this. I know kind of all over the map, but I think like understanding the products and understanding the problems that they solve and understand how they all work together is essential. So hopefully this training gave a little more clarity on that. If you're watching the replay and you have any questions, or you think maybe I could have done a little bit of a better job diving into certain areas, let me know, and I will spend more time focused in the areas that you think you need the help with, and we will go from there. So all right. Thanks, Jacob. Thanks for the support. Thanks for, being on here and listening. And hopefully it helped you in your process as you're going through everything with Dan. And on the team, and we'll go from there. So, all right, guys, have a blessed, inspirational day. We'll talk soon.